Hey guys, Rob Mitchell here. Thanks for joining me for day trading price bar secrets. What are your charts hiding? What are your charts hiding from you? Let's take a look. Yeah. Price bar secrets. What are your charts hiding? Differences that make a difference. I want to show you some really cool things about price bars and why you want to think about that a little bit. Yeah. So first off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. Price bar secrets. So the methods I show you in these YouTube videos are intended to show you various ways you could establish components to a successful day trading system or strategy with any tool set. For these examples, we're going to use tools that were known to have known proven historical results. Most indicators out there are likely random for a variety of reasons. I could lecture on that all day, but I'm not going to. We're going to focus on the price bars today. Yeah, including ones we're discussing in today's video. So super relevant. Yeah, randomness. Yeah, you don't want random. I'm going to show you where random is and how to be aware of it. Yeah. So if you'd like to have indicators that are designed to be structured or non-random, then consider those used here. When you create a chart on your Ninjatrader or charting package, you select a bar type. You know, a bunch of different bar types. We're going to look at a few in a minute, the common ones. Yeah. And when you select a bar type, it's good to know what the impact that choice will be on, number one, what you can see on your chart. Yeah. And how about what you're feeding your indicators? Yeah. What you're feeding your indicators, what your indicators can see as well, not just you, but your indicators. Yeah. So you could have a random indicator feeding it good data, or you could have a random data feeding a random indicator. You know. And you get random on top of random. What's random? 50% or worse. Yeah. But if you take two randoms and you put them together, it's about 25%. Yeah. So it's important you're actually getting leverage at this point where I'm telling you to look here. A price bar can act like a filter. Yeah. It lets you see some things over others and or prevents you from seeing some things over others. It lets you see some things over others, or it prevents you from seeing some things over others. Yeah. It's a big choice. Yeah. But most people just throw it up on there based on what they're used to or what they've seen in books and things like that. Yeah. So a price bar impacts everything from there. Yeah. Some bar types are better for some things than others. In some cases, it might not matter as much, and in others, this decision will significantly impact the outcome you can achieve with it. Yeah, the old trading books, a lot of them used to have 5-minute charts. Yeah, back in the early days, the charting packages had minute-based charts. I know because I was there. Yeah. If everyone uses 5-minute charts, then what everyone sees is the same thing, and there may be no edge. Oh, no. Right. We live in a world where there are forces that may try to make everything be the same. Just going to homogenize everything. They're going to dictate what everybody sees. Yeah. In trading, it is super important that you do not do this. You have to be different. I've long said successful traders are willing to do things that other traders are not willing to do. Or successful traders are looking at things that other traders can't see, is another way of looking at it. Yeah, super important. Yeah, so in our trading room, for example, we keep charts to help us see what other traders are seeing so we can exploit that. Literally, we have charts on our screen that tell us what other large groups of traders are doing so that we can be on the right side of it. If they're in control, we want to be on the side with them. If they're not in control, we want to take advantage of them getting stopped out. You know, we discuss that every day in our trading room. You know, super important, right? We intentionally use different kinds of bars. that are available elsewhere to help us see what those other traders cannot see, both via the indicators and via what you can see on the charts. So we want to have our own liquidity in the space where we're executing and not where everyone else is trading at. What do I mean by that? I don't want to trade where everybody else is trying to get filled long. I want to be in before them. I want to be in before they get long. In order to be successful trading, somebody else has to carry your trade to success. Yes. So I want to get in before everybody else hops on the bandwagon and have them carry my trade to success, whether it be that they're doing it by getting stopped out, or whether they're doing it because they're afraid of missing, or whether they're doing it because they know the market's going higher or lower and they want to get on board with it because they're smart money, preferably be in before they are on that, or in smart ways of doing it while or during the time that they're doing it. So this is no small point. So on a 5-minute bar, it closes at the same time and everybody's vying for about the same price. On 5-minute bars. I'm just using 5-minute bars as an example. It could be any other different kind of bar. You have traders vying for the same pricing. So I could do a study on this, and I could show how traders impact market movement at or about these points. I could go study how price moves around 5-minute closes. I'm not specifically going to do that for this video, but in simple terms, because we've already done that. I'm not going to do a new study for it, but much of the movement statistically, for example, in a 30-minute period, will occur in the first 8 minutes and the last 5 minutes. Why did I use 30-minute for that? Well, we're talking about 5 minutes. So about 5 minutes before the end of the 30-minute period, 5-minute players will come in, be a little bit more likely. 30-minute players, market profile players, will come in the last 5 minutes. What are they trying to do? They're trying to do exactly what I just said. They're trying to front run what they think it's going to do so that the traders that are responding at 30 minutes are going to carry their trade to success. And the first 8 minutes, so that period in the middle, that's a little bit more of a void. It's not that you don't get movements in the middle, but you would be surprised if you go look at the charts how often the first run in a 30-minute period happens in the first 8 minutes, and then it turns around or consolidates from there. Could you build a trading system around that? Yeah. So I could give some thought to that, and I could ask how could I exploit that or build a trading strategy around that if I desire to do so. We kind of operate at another level above that, so we're already taking that into consideration with the way we do it, say, in the trading room. So what are some other aspects of price bars that have an influence? Some price bars, like Smart Super Renko that we use in the trading room, ultimate tick bars, ultimate order flow bars from Indicator Smart, are designed to close where there is pressure, where the market's moving, where it's being pulled to. This ensures our indicators are printing at decision points in the market and not, or places that are less likely to be at random points, or points that are already exploited, as we've already been describing and discussing. We don't want to trade at already exploited prices, because once price is already exploited, I may get consolidation. Anybody who's been trading for any length of time knows what I'm talking about. We're talking about where you can find the place where you're in the pocket and not after it. The results could be disastrous if you're not in alignment with these things in the market. So below is a study for the common price bars available in most trading packages like Ninjatrader. So these are some old charts that I used in an old study. Look at these charts. I got tick bars here. I got a couple minutes. I got a 4 range, and I've got a volume. Volume, tick, minute, time-based, range charts. These are the common ones in a trading package. Historically, they're common ones. The time-based ones were originally the most common, and then they had tick charts and volume charts, and then they had range charts and all different kinds of charts. So if you look at these bars, Yeah, if you look at them, look at the tails on the bars. Yeah, I use a candlesticks on these so you can see the tails on the bars. Are there tails at both sides? Look at where the closes of the bars are and study where the closes are. Yeah, where the closes are. It'll give you an idea of what these bars are like and what kind of information you might be feeding to an indicator. Yeah, so these are just some tables. Yeah. So what I have here, okay, on the volume bars, for example, I take, well, the percent of bars that closed at the directional extreme. Yeah, if it's an up bar closed at the high, if it's a down bar closed at the low. On a volume bar, about 32%. Yeah, about, so what, 68% of volume bars in general will close at, not at the extremes. Yeah, not at the extremes. That's less than random, yeah, isn't it? Yeah, 50% would have been random. How about the time-based bars? This is 132 second bars on this particular one. I looked at all kinds of these. At the time, only about 12% of time-based bars would close at the directional extreme. 12%. Man, that's pretty hard to achieve. And I'd be wondering, you'd think, well, that'd at least be random, right? How about tick bars? 25%. Why might this be the case? You could give some thought to that. On the range bars at 72%, you'd expect that. Why? Because range bars are supposed to close at their directional extreme, but they don't have to, depending on the design. Yeah, yeah. That's this number here, 72%. Yeah, I'm showing the variance here. A large variance means it's more random. Yeah, so the most random of all would be the volume bars and the tick bars. Yeah, and then the range bars and the second bars. Well, you say, well, Rob, that number was really low, only 12% is 90. Yeah. What that's telling you is the variance is high. Yeah, that tells you it's more random. Yeah. So you want to get away from random is what you want to get away from. So this one had a higher number, but it looks like there's more noise in there, about 150% more noise in there on the range bar, yeah, than the second bar, for example. Yeah. So okay, so by closing at random, these various bar types are essentially feeding your indicators random data. Now, I don't recommend doing this, but like if you're super experienced with a bar type that you've been using for like ever, you know, that's fine. It may overcome these kinds of things. You may be so used to looking at a bar that's doing funky random stuff that you actually do fine with it. You know, otherwise I suggest a non-random structured type of a bar. Yeah, like what we're talking about here. Yeah, and depending on what you're trying to do. Yeah. Like for example, if you're pure counter trend trading and you're just going to fade at a certain price, this wouldn't be as critical. But if you're trend trading or counter trend trading where you're using order flow and things like that, or price patterns, price action patterns, yeah, super important. Yeah, super important. I'm going to tell you a little bit more about that in a minute. So what's another thing bars do? They disguise things you want to see or outright make you miss trades that may be there, but that you cannot see. Yeah, we talk about bar being a filter. Yeah, it prevents you from seeing things that you want to see, but you can't see it because bar is preventing you from doing it. And I've long discussed this for many years. For example, on a 5-minute chart, much of the day's range may only be a few bars. Yeah, I didn't have to go very far to find an example of that. In fact, I didn't go anywhere to find an example of it. I just pulled today's ES chart and it was right in front of your face. So I'm going to show you in a second. Yeah, the market will make moves where all or most of the action is hidden inside the time-based bar. It'll be hidden inside the time-based bar. Yeah, so this is today's 5-minute chart with a 30-minute overlay on it. Yeah, using a indicator smart periods, it gives us statistics and things like that on the bars. Yeah, and lets us know where we are in the day so we can pattern classify the different 30-minute periods of the day. So B period today, this guy here, yeah, it started by trapping down here, you know, trapped this brick right here, and then B period headed higher. Well, B period was 39% of today's range. Well, one 30-minute period out of all the periods in the day was 39% of the day's range. So what else did it do? I've got smart momentum on there down on the bottom. Yeah. It pulled that smart momentum so strongly. Normally, smart momentum, the upper boundary is 2. It's about 2. Yeah. This went all the way up to 10. So it made the momentum be 5 times normal, and then it took it 30 minutes for it to renormalize. So it's not just that you got into a situation where it was harder to see the trade, or at least it only showed like a couple places, in these 5-minute periods, right? But it also made your indicators get all goofy for about a half hour or more. Now it went to -5 down here. I mean, I legitimately could have said it was an hour and a half before it got normal again. What happens once that market makes that move like that? It chops sideways. We already talked about that. Yeah. Traders see this move, they get all excited, they hop in here, they get chopped to death, and then it takes off over here. Hour and a half later. That's a standard thing. If you've been trading for any length of time, you know what I'm talking about. Got to make sure you get on the right side of these things. You got to be able to see the trades. Yeah. This is this one's the same period, Smart Super Renko chart. Here's the B period. Yeah. You can see the momentum was normal through the whole thing. You see where it came out of the bottom here. And you can see where you get these opportunities to trade on different other patterns that we've discussed in other videos. Yeah. So a little easier to find the trades inside those periods instead of it just having like several bars for the entire B period. Sometimes the whole bar, you'll just get the gigantic movement in one bar. Yeah. In this one, at least it was like 4 bars. 39% of the day's range was 4 or 5 minute bars. There's 405 minutes in a day session on the ES. Yeah. 405 minutes, and 39% of the range of that was done in 20 minutes. Yeah. Think about that. So it's worth some thought. Yeah. So these are just a few examples of how price bars influence your indicators, your trading, what you can see. This is a super big topic. It's so fundamental to technical trading and charting. I can't cover it all in a short video, so I'm just giving you some things to think about. What's the best takeaway then? Yeah. Well, next time you make a price chart, give some consideration to how that choice impacts what you can see. I could do a video to do the same thing with your indicators. What are my indicators computing? What can they see? And what does that mean for what traders are trying to do? Yeah. There's a real game changer when you start thinking this way. So depending on what you're trying to accomplish, these choices may be different. Yeah. For example, with Smart Super Renko from Indicator Smart in the last chart that we looked at, now this guy, that one right there, Smart Super Renko, yeah. We can identify specific pattern classifications that enable us to be extremely specific about what the trade looks like and classifies as. In the last years in the trading room, 8 years, we have built a whole science around this. I mean that literally. This is why we refer to these bars as structured bars. We have a system for naming and identifying virtually any price pattern on a chart. And we know associated statistics for potential outcomes. Now, so just on the price bars alone, we have a system of statistics, or I don't like to use the word statistics because it sounds all fancy and everything. What we mean is we know what the probability is that the trade could be carried to success. Yeah, based on the patterns and the pattern classifications on the chart that we use. Yeah, that we've been doing for years and years. Various other permutations of these concepts can be used to make standalone day trading systems and strategies. The possibilities are endless. It goes on forever. You got to be careful also to make sure, that you're not looking at what everybody's telling you to look at and you got to make sure that you're looking at what you can see. Yeah, all these are videos that we've done in this series. Yeah, so see my other recent videos for more on trading system revelation, four quadrant design, etc., and trading what you see. Yeah, so if you're serious about learning about trading, join us in a trading room. Yeah, join us in the trading room. There's a live trading environment where you learn concepts about trading systems, trading strategies, design, and where these little pockets are happening, what's the most likely direction for expansion and trending and everything else. Yeah, so if you like this video, please subscribe, like the video. Yeah, Indicator Smart, Stock Index Trading Room, Oil Trading Room, Manifesting Your Future Guru, special coupons available, huge coupon for room members. Yeah. And the indicators that we've used in this video can be found at indicatorsmart.com. Yeah. Thanks for joining me for this bar secrets. What are your charts hiding, and how to make it so that it's letting you see enough of the right stuff that you can do well with it. Yeah. So thanks for joining me on this, guys, and we'll see you on the next one.